In today's currency report, we're looking again at the U.S. dollar. It's been hit hard pretty much all year, but a recent rebound has some strategists and traders actually rethinking their dollar bets for 2010. Our Sara Eisen has been following that story and telling us whether or not 2010 is the time to buy the buck.
Well, the future is looking up for the dollar. As Dennis Gartman puts it in his letter this morning, this is a watershed shift in sentiment toward the dollar. And you can see that playing out right now in today's trade. The dollar is holding up. One trader points out to me the Dubai bailout story would typically be a risk-positive trade, but you're not seeing a huge reaction in the foreign exchange market. Euro is higher on that risk trade, but it is not a major move. It's less than a quarter% move here, and that is notable, he says, because you really see the reluctance there on dollar selling. Another good indication, option traders are betting on dollar strength going into next year. If you track the recent action in UUP, that is an ETF, so it's traded like a stock, but it bets on the dollar rising. If you look at the recent action in that stock, you can see a lot of interest, unusually high volume there, and the calls have also been rising. Calls all the way through March, signaling there that the dollar downtrend really may have run its course here.
But how much of the lack of movement in the dollar might have to do with the fact that this is the week where we're going to see a Fed meeting and everyone's sort of holding their breath ahead of that?
That will be the main event. And one of the reasons actually for this recent dollar bullish momentum has been the outlook for interest rates. Better than expected economic data like U.S. retail sales, like the jobs data, increases bets that the Federal Reserve may have to lift rates sooner than later. So traders will be dissecting that Fed language on the scope for further interest rate hikes very carefully on Wednesday.
And we know you'll be doing the same for us.
I will.
Thank you so much, Sara Eisen.